Inflation continues to be a big concern for investors. Today, I'm going to be breaking down some of the stuff that I'm looking at with the CPI report that just came out this week. We all know that the markets fell hugely. We did a study to see what markets tend to do after big pullbacks, and this could really help inform you of what we can expect going forward. All right, let's get to it. So the market just got rocked. We got a big inflation report. Today, what we're going to do is we're going to break down that inflation report, talk about what areas saw the prices go up, and also the areas where it went down. But then we're going to look at what happens to a market, when the NASDAQ falls 5% in a day, what happens to markets going forward, right? Stocks just got rocked. You might be surprised at what happens, in the future. But let's go ahead and look at this CPI report. I'm over here at mapsignals.com. We did this cool report yesterday. So inflation rose in 12 out of 21 categories. So let's go ahead and look at that really quickly. So in yellow, we have highlighted all the areas where prices actually rose. So the first thing is that month over month, prices rose 0.1%. So that was a little bit more than what expectations were. But if you dive a little bit deeper, you can start to see, where some of those prices were going up. And here's the first one. So food away from home, prices were up 0.9%, right? So if you're out there, you're going to a restaurant and you're like, man, prices continue to go up. Well, that is exactly what we are seeing in this report. Additionally, energy services, those were up over 2%. Utilities, right? People have been talking about utility prices, natural gas, all of that is elevated. That was up 3.5%. And then if we look at some of the other areas, you've got new vehicles, you've got apparel that was up, shelter, right? People are talking about rents and things, right? So some of this, these price hikes, it's a little bit stickier. And so whenever we saw these elevated numbers, investors, they're concerned that there's a lot more that the Fed has to do in terms of rate hikes, right? A lot of people, I was even thinking that September we could just get it all done, maybe do a little bit, at the end of the year. But it's looking like there could be more rate hikes. And that is what had investors really spooked, right? And that's why they sent stocks a lot lower. Now, prices fell in 5 areas: energy commodities, gasoline, and used cars and trucks. Now, look, you go to fill up your tank, chances are it's a lot less than what you used to see. So that is a good thing. But overall, it was not an exciting report. And they sent stocks down huge. The S&P was down over 4%. The NASDAQ was down over 5%. So let's go ahead and look at those returns. Like, what do forward returns look like? So going back to 1990, the NASDAQ has fallen, this is the composite, has fallen 5% or more in a day 41 times. So what we saw on Tuesday was the 42nd time. Now check this out. A day later, stocks tend to be up 1.6%. 6 months later, up 3.8%. And then 24 months later, up 12.3%. Let's go ahead and look at that in chart form. So here we are. Let me move my mug out of here. These are all of the times where the NASDAQ fell over 5%. And then you can see, look, there's a lot of red over here. So, 2000, the dotcom bubble burst, a lot of negative prices going forward. And then also remember the global financial crisis. There were some ugly numbers in there as well over the long term. But if you average all of this together, one day, 6 months, 9 months, all the way out to 24 months, on average, the NASDAQ composite is positive, right? So look, what's the main takeaway? The main takeaway is, outside of some major cataclysmic event like, the dot-com bubble or the GFC, chances are it's a good time to be hunting for stocks. Now, I want to bring one other piece to this. What if we just looked at 2005 and forward? Let me move my mug out of the way. Now look, that is going to be the tail end of 2008. So, if you're in the camp and you're like, look, I think that we're going to see better markets next year, we might have some really big gains in store for us. We just got to get through the next 3 to 6 months. But since 2008 and moving forward, anytime that the NASDAQ has fallen over 5% in a day, the average forward returns are very, very positive. So inflation continues to run a lot hotter than what many had expected. And that just means that interest rates are probably going to be a little bit higher for a little bit longer, and that could be a headwind for stocks. But let's go ahead and recap what we saw with the NASDAQ, right? So it fell over 5% on Tuesday. Looking back historically, when that happens, the average returns for stocks 1 day out to 2 years later are very, very positive on average. Now, there were 2 times where that was not positive, and that was during a big crisis like the GFC that we saw in 2008, 2009, and the internet bubble. So listen, if we have a big catastrophic event, yeah, prices are going to suffer. But if the Fed can somehow manage, a soft landing, things aren't as bad as we expect, there could be better prices ahead for stocks. But again, this is not the all clear signal. So as you are investing, what areas are probably going to do best in this type of environment of high inflation, potential recession? Well, think about defensive areas like healthcare, right? No matter what the economy does, people are still going to spend on their health. Also, don't forget about energy stocks, right? We've got inflated oil prices, natural gas prices, with a lot of, pressures that are pushing them higher due to war and everything else that's going on, lack of supply, big dividends in that arena. So I think that's an area to also look at. Additionally, look at utilities. They tend to be very defensive as the market is trying to deal with inflation. It's starting to deal with a slowdown in the economy. And last but not least, look for some of those blue chip, high growth, high cash flow, dividend growth names, right? That could be in the semiconductor space. It could also be in the big cap tech space. But remember, do your own research. Chances are it's not a good time to panic out of stocks after what we have witnessed. And look, if you are long-term, look for great opportunities. I think that's how you are going to win in the years to come. I'll see you next time.